Have you heard the latest news from the Central Bank of Iraq? They've just rolled out a massive new currency policy, and it's shaking up the entire financial landscape of the country. If you've ever been curious about the Iraqi dinar, its value, and the future of Iraq's economy, you're in the right place. We're going to break down everything you need to know about these game-changing reforms. For years, Iraq's economy has been on a roller coaster, heavily dependent on oil and the U.S. dollar and the battling corruption. But now, the central bank is stepping in with a bold plan. The main goal? To stabilize the dinar, strengthen the financial system, and build a more resilient economy. So, what exactly is this new policy all about? It's a multi-pronged approach focused on cutting down black market currency trading, encouraging the use of the Iraqi dinar in everyday transactions, boosting foreign currency reserves, and making international payments more transparent. By taking these steps, the JBE aims to rebuild trust, not just among its own citizens, but also with international investors who have been watching from the sidelines. One of the most significant changes is the push to reduce what is known as dollarization. For decades, the U.S. dollar has been king in Iraq, used for everything from major international trade to buying groceries. This has left the dinar weak and vulnerable to external pressures. The JBE is now actively encouraging businesses to switch to the Iraqi dinar for local and even regional trade. In fact, Iraq is already striking deals with neighboring countries like Iran, Turkey, and the UAE to trade in their own local currencies. This isn't just a symbolic move. It's a strategic play for greater financial independence. By strengthening the dinar's role at home and abroad, Iraq is taking back control of its economic destiny and shielding itself from outside financial shocks. It's a huge step towards building a truly sovereign economy. Now, let's talk about the exchange rate, the number one topic for anyone interested in the dinar. The official rate set by the central bank hovers around 1,31 dinar per US dollar. However, for a long time, the black market, or parallel market, has told a very different story, with much higher rates that fuel inflation and the public frustration. To tackle this head-on, the JBE has tightened its grip on foreign currency auctions. Now, only licensed banks and the approved traders can get their hands on US dollars through official channels. This is designed to shut off the supply to the black market and stop illegal dollar smuggling. And guess what? It seems to be working. The gap between the official and the parallel market rates has already started to shrink. By controlling the flow of money, the JBE is creating a more stable and predictable exchange rate environment, which is fantastic news for both ordinary Iraqis and the potential investors. But this new policy isn't just about controlling currency. It's also about dragging Iraq's banking sector into the 21st century. The JBE is championing a massive digital transformation. Think about it, promoting digital payments and banking, encouraging people to open bank accounts instead of stashing cash under the mattress, and moving salaries and government payments online. These are not just convenient upgrades. They are powerful tools against corruption. When money moves digitally, it leaves a trail, making it much harder for illicit activities to go unnoticed and easier for the government to collect taxes. Even more exciting, Iraq is exploring the idea of a central bank digital currency, or a digital dinar. A JBDC could revolutionize the financial system, offering even greater transparency and efficiency. This digital push is a clear sign that Iraq is serious about building a modern, accountable economy from the ground up. So, what does all this mean for businesses and investors? For local Iraqi businesses, especially those that have relied on cash and dollars for years, there might be some short-term growing pains. Adjusting to new regulations and the digital systems takes time. However, the long-term vision is incredibly promising. A stable, transparent financial system is a magnet for foreign investment and makes doing business much smoother. For international investors, these reforms are a massive green light. They signal that Iraq is committed to monetary stability and creating a reliable investment climate. As the dinar's fundamentals get stronger, we could see its value appreciate, opening up exciting new opportunities in sectors like oil, banking, and construction. Investors are already taking notice, seeing the potential for significant returns as Iraq's economy finds its footing. Of course, We can't talk about Iraq's economy without mentioning oil. It's the engine that powers the country, accounting for over 90% of government revenue. When oil prices are high, Iraq's foreign reserves swell, giving the central bank the firepower it needs to support the dinar. But when prices fall, the country faces budget shortfalls and the rising inflation. The new currency policy directly addresses this over-reliance. The plan is to use oil revenue more strategically to fund diversification projects. By investing in and strengthening other sectors like agriculture, tourism, and manufacturing, Iraq can create a more balanced and resilient economy. A diversified economy means a more stable dinar, one that isn't at the mercy of volatile global oil markets. This long-term strategy is crucial for sustainable growth and prosperity. So, what do the experts think? Financial analysts are cautiously optimistic. They see the CB's actions as a serious, long-term strategy to methodically strengthen the dinar. While you shouldn't expect a sudden, dramatic revaluation overnight, the consensus is that Iraq is on the right path. If the government can maintain control over inflation and continue to reform its foreign trade practices, the dinar is expected to appreciate gradually over the next few years. Some analysts are predicting a steady exchange rate moving towards the 1,25 to 1,3 range in the near future. This, combined with better integration into the global banking system, is expected to boost investor confidence and attract more capital into the country. The road ahead won't be without bumps, but the direction of travel is undeniably positive. Ultimately, this is all about improving the lives of the Iraqi people. A stable dinar means more purchasing power. The price of imported goods could go down, easing the burden of inflation that has hit families hard. A growing, modern economy creates better job opportunities and higher wages. With the push for digital banking and stronger anti-corruption measures, everyday Iraqis can finally start to see the benefits of a transparent and functional financial system. It could even become easier and cheaper for the millions of Iraqis living abroad to send money back home to their families. This transition will certainly take time and patience, but it offers a tangible hope for a stronger nation and a brighter financial future for everyone. To wrap it all up, the Central Bank of Iraq's new currency policy is a landmark moment. By tackling dollar dependency, tightening currency controls, and embracing digital innovation, Iraq is laying the foundation for long-term economic stability and growth. Yes, there are still challenges to overcome, from global oil price swings to internal political uncertainties. But the message is loud and clear. Iraq is determined to strengthen its currency, modernize its economy, and reclaim full control over its financial destiny. If these reforms are successful, the Iraqi dinar has the potential to become one of the most stable currencies in the Middle East, serving as a powerful symbol of Iraq's incredible comeback story on the world stage. Thanks so much for watching. If you found this breakdown helpful, please hit that like button and subscribe to the channel for more deep dives into the world of finance and economics. We'll see you in the next video.